The US dollar index continues consolidating near its 20-year high ahead of the US official data on the labor market. The recent FOMC meeting minutes boosted demand for the US dollar as investors received proof that monetary authorities were ready to take tougher measures. In our video review, we'll find out what other events may shape the market sentiment early next week. A flow of important macroeconomic data will begin only on Tuesday. Traders are likely to focus on Germany's economic sentiment report prepared by the ZEF Institute. Consequences of anti-Russian sanctions as well as the existing economic risks ahead of the ECB's key interest rate hike have an absolutely negative influence on economic sentiment. Thus, in July, the indicator is foreseen to remain in the negative area, or it may even slide to minus 37.5 points, thus intensifying pressure on the euro. Wednesday is expected to be a more active day. Since the very beginning of the Asian trade, investors may start pricing in the news about China's trade balance. In May, economists reported a really positive dynamic. The Chinese authorities loosened quarantine measures, thus stimulating exporting activities. In other words, the supply of Chinese goods in the global market increased by 16.9%. Production also surged, thus causing a 4% increase in imports. In June, the data could be even better, which will inevitably add the attractiveness to the currency of China's key supplier of raw materials, namely the Australian dollar. During the European session, traders will learn about the UK economic situation. The country is going to disclose the GDP data for May. According to the forecast, the UK economy may contract by 0.1%. Data on the UK industrial production will neither encourage traders. In April, industrial production dropped by 0.6%, intensifying risks of the economic recession in the country. Notably, the current level is significantly lower compared to the one recorded before the pandemic. Against the backdrop, traders may start selling off the pound sterling. During the American session, traders will learn about changes in the US inflation. Judging by market expectations, the price growth issue is unlikely to be solved in the near future. The annual inflation rate may go on accelerating to 8.7%, forcing the Federal Reserve to take even more radical measures. Under the current conditions, markets expect the Fed to raise the benchmark rate by another 75 basis points. Meanwhile, the Bank of Canada may take the same decision. In June, the regulator raised the key interest rate by 50 basis points. Now it is planning to hike the benchmark rate by 75 basis points at the meeting, which is scheduled to take place on July 13. It will be the fourth rise in a row. The fact is that Canadian inflation several times exceeds the targeted level of 2% per annum. Demand for the Canadian dollar may show a short-lived rise amid the monetary policy tightening. These are events that are going to influence the market sentiment in the beginning of the next week. Stay tuned, follow our reviews to be always in touch with the latest news. See you soon!